Hello and welcome to the 248 Emerging Companies Funds Update for the June 2026 quarter. As a reminder, specific portfolio company information provided during this call will be limited to the 248 Emerging Companies Fund 2. Information pertaining to investments held in Fund 1 will be provided to unit holders and their advisors separately. If you are a unit holder or an advisor with an interest in Fund 1, please contact us so we can ensure you're included in all communications going forwards. Looking at market performance over the past 12 months, we've seen a dynamic mix of optimism and uncertainty. After a confident start to the financial year, we saw market volatility rise on the back of persistent inflation and the RBA's response to increase interest rates. There's also heightened geopolitical tension and the resultant shocks to energy supplies, AI-related disruption in the tech sector, and uncertainty around economic growth and consumer demand. Recent IPO activity included Skincandy, K-Tech Aerosystems, FDC, and Boresight, pointing to early signs of life returning to the domestic small cap listings market. Boresight in particular saw a standout debut, closing 60% higher on its first day of trading, underscoring the extent of pent-up demand for compelling new listings, even as broader IPO volumes remain subdued relative to prior cycles. Taken together, these debuts reinforce the view that while the market remains selective, well-positioned, or thematically driven businesses with clear growth narratives are still able to attract strong support at an IPO. And the improving tone bodes well for the pipeline of listings expected later in this calendar year. Whilst volatility remained a key feature across both public and private markets throughout the period, we have been pleased with the significant progress achieved by our portfolio companies. Across both funds, we have seen significant revenue growth in our portfolio companies and continued execution against their strategic objectives.
Whilst performances naturally vary between individual investments, the overall quality of execution we've seen from the management teams across the portfolios has been excellent, with the majority of our portfolio companies going from strength to strength in terms of their market positions, expanding customer relationships, and pursuing growth. We've included details about the portfolio companies in the quarterly report, and we won't go through all of them on this call. But to touch on a few, Automotive Superstore delivered a 42% revenue growth for the quarter and 33% for the year. The company is currently conducting a capital raise to pursue further growth opportunities and is performing very well. Deep Blue Company recorded its second consecutive year of profitability and provided a very strong growth outlook for FY27. Once again, another company that reached record levels of revenue in FY26. Future Group delivered its best year on record as well in FY26, with revenue up 19% and underlying EBITDA margin at 36%. Moneytech held a record loan book of almost 400 million at 30 June 2026, which is 35% up on last year, and all originated organically. And Maneuver, again, record revenue for the year and EBITDA growth of 38% for the year, driven by new client wins and a sustained high interest rate environment.
Now moving to performance. The fund performance is contained in the quarterlies, and you can see a summary on the screen now. As mentioned earlier, Fund 2 portfolio companies have had a strong year, with combined revenues over the last financial year growing approximately 10% to $633 million, or approximately 15% growth if Lendi is excluded, as it skews the numbers due to its size and slower relative growth than the rest of the portfolio in 2026. In terms of performance over the quarter, the net asset value of the fund as at 30 June was $83.5 million, or $1.79 per unit. Looking at what has been distributed and the net asset value, we arrive at a total value of $2.14 per unit, which equates to a net profit for the total portfolio of $15.7 million, or 34 cents per unit. The 3-month performance of the fund, net of fees, was up 0.56%, and since inception net of fees, the fund has returned approximately 19.2%. The since inception net of fees IRR of the fund as at 30 June is 4.1%, and as at 30 June, 10 investments remain in the Fund 2 portfolio.
Thank you very much for joining us today, and thanks for your continued support. As always, you can reach us via email or phone to discuss anything from the reports in more detail or ask any questions that you have. Thanks very much.